Good morning. You've tuned into ET Now. This is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramat. Let's kickstart the show by taking a look at the top headlines. First up, global markets continue their positive streak. We saw a sharp rally combine the precious metals as well, taking gold and silver to a multi-year high on safe haven buying. Crude also advances strongly, and when we look at Dalal Street back home, it's trading lackluster right now, completely flat. Broader markets definitely looking better off. Next up, you have some earnings to watch out for and some earnings candidates who delivered their numbers yesterday. You have an Axis Bank to look at and an HUL, which of course are trading in completely different directions at this point in time, but two heavyweights to watch out for. You also have Bajaj Finance, which says that the environment remains challenging. This one is also pretty much sulking in trade. From today's list of earnings candidates, you must watch out for an L&T as well as a Bajaj Auto as far as the Nifty-Fifty names are concerned. Lastly, some change of guard happening as well as Bajaj Finance. COVID-19 has hit the company. Sanjeev Bajaj will be replacing Rahul Bajaj as chairman. Rahul Bajaj will be handing over the reins of Bajaj Finance to his son. He says that the move is a part of the succession planning, and Rahul Bajaj will remain the non-executive director at Bajaj Finance. Lastly, you also have some boost coming in for APIs. The government approves production-linked scheme to boost API exports. Similar schemes planned for more sectors. So watch out for this space for more on that. Varun, why don't you walk us through the COVID-related updates?
Yeah, sure, Karunya. Happy to do that. We flag these off every day, so let's get a move on. And we have some interesting new data for you today on the COVID front, beginning with the fact that global cases have surged past the 15 million mark. So that's the headline for this morning. COVID cases in India edge towards 12 lakh, so that's domestically. Ensure people have early access to vaccines, says Niti Aayog. So we had Adar Poonawala talking extensively yesterday. Now we want to speed up the process. Government open to announce further steps to revive growth. So that needs no explanation. Aggressive testing can bring down positivity rate, says the Health Ministry. Delhi rules second screening for international flight passengers. So that's something coming out of aviation. Amarnath Yatra called off to live telecast prayers. Karnataka rules out lockdown extension. Nepal to resume international flights from August 17th. Finally, as of yesterday, with the €750 billion deal, the EU now strikes a $2 trillion COVID deal to revive the economy.
Okay, back to the markets once again. Then, like I said, benchmarks trading completely listless right now. Sensex is trading with a slight negative bias coming in, but nothing very significant at this juncture. But it's the broader markets where the action lies today. Mid-cap index is up 0.5%. Small cap is up 0.3% as well. From the sectors as well, you have metals shining out brightly, up 1.5%. Nifty Pharma is up 1%. So that's the one that perhaps is capping the downside for the markets. These two sectors combined. Some positive action on the private sector space, private sector bank space as well. Nifty Realty and Nifty Bank also trading flat, but the bias is towards the gainers. Nifty Auto down 0.6%. You have IT index, which is down 0.8% in trade. Axis Bank continues to fly in trade. It's up 5%. You have NTPC and Power Grid and even a Vedanta and Titan gaining in the excess of 3% each. ITC is also looking fairly firm, up 2.5%. On the flip side, you have a Wipro down 2%, Hero MotoCorp down 2%, HUL down almost 2% as well. Infosys, Shree Cement, HDFC Bank, SBI, Kotak Bank witnessing some amount of pressure at this juncture. Let's take the market chatter forward with Kunal as well as Gaurang joining in this morning. Hi gentlemen, thank you so much for taking time out. Kunal, coming first to you. Which way do you think the Nifty is headed now that we're firmly above that 11,100 mark? Are there any critical levels to watch out for from here on?
So, good morning, Karanya. I believe that now we are into a state of, mixed, cues on the indices, because on one hand, the momentum, of course, is on to a, very strong upside. But then because of this last 4 days or 5 days of very fast, very swift and very pacey up move, many of the indicators have got back into an extremely oversold territory. And that's not a comfortable sign, when you look out for, because indicators like PCR, the put call ratio, when it enters into that 1.6, 1.7, we've seen historically that how it results into the kind of correction. But on yesterday's reading, closing basis, the indicator come back to 1.87 level. So I sense that there could be some sort of a choppiness which could come back into the markets, especially on the indices, both on the Nifty as well as on the Bank Nifty. So I think in that regards, traders can continue to hold on to long positions. You may have a bias on individual stocks depending on the way the momentum shapes up into these names, but then you have to trade your stop losses significantly higher, and these are the times when you have to be more risk averse rather than being on the risk on mode.
Right. Thanks for that, Kunal. Gaurang, good morning. What's your read on the markets today? And Q1 earnings have now started to trickle in. So what sense are you getting about which direction we're headed in?
Thanks, Varun, and morning to all of you all. So I think what we were anticipating in terms of higher levels for the Nifty were 11,000, 11,200. And I think we are just 40 odd points shy of that 11,200 mark. So what we have advised is that now that we are here and we have recovered a sizable amount of ground in the last couple of weeks, it is prudent to advise to take money off the table, at least from a short to medium term point of view. As far as your question on the first quarter earnings are concerned, I think what our sense, Varun, is that it is going to be more of a stock specific performance given the earnings backdrop. We had Axis Bank, Bajaj Finance, HDFC Bank announce their numbers just yesterday, and last week on Saturday HDFC Bank. Today I believe we have L&T, and on Friday we have Reliance, and coupled with a couple of interesting other names. So it's more of a stock specific market on fallback of earnings. But this correction also, Varun, we don't expect any huge correction to come through. I think it's going to be a minor profit booking, and it is prudent to have this kind of corrections in a market which has recovered such a large amount of lost ground. And even it makes a very healthy base for newcomers to come into the market. So purely from a short to medium term, take some money off the table. And on investment ideas, I think from a long-term point of view, in terms of wealth creation ideas, if I have to just elaborate a little bit further, two stock ideas. One is from IT pack, HCL Technologies. On the earnings backdrop, we have upgraded our targets to 750 from a long-term point of view. And the second one is from the pharma pack, Granules India is the stock. A great set of numbers, much better than what our estimates are. Interesting launches they have lined up, which is likely to aid the earnings from a long-term point of view. And over there, we have stretched our targets to 350, again from a long-term point of view.
Okay, Gaurang, thank you for that. Yeah, Granules, compared to the kind of numbers it's reporting versus its peers, it's clearly far cheaper than a lot of other pharma stocks which are really entering a whole new level. With that being said, Kunal, let's come back to you. I don't think we got your sell call on MRF or your buy on Jindal Steel. So what's your rationale there?
So yeah, I think I've recommended two stock ideas. One of them is a short, and that's a sell on MRF. The stock now forming some sort of a distribution pattern on the daily charts. It's on the verge of breaking back below its 200 moving average as well. And that if it happens say over the next 1 or 2 days, then I believe that there could be more chance for sharper correction into this stock. So recommending a short on MRF in the anticipation of the break of that average as well. Targets at 62,000, stop loss at 65,500. Metal stocks overall have been doing pretty well for themselves, and especially in the last 2-3 days, there have been some momentum which has come back into these stocks. JSPL apparently has been one of the stronger names. It's hardly seen any major correction in the last, I think, 1.5 or 2 months as well. and it's it just about adds on to the kind of gains the stock has seen from last 3-4 months. So I believe JSPL could be interesting buy at current levels. Near-term targets could be kept at 188 and stop loss could be kept at 176.
Okay, thanks Kunal for that. Let's quickly address some buzzing stocks as well on our BNS and stock cloud before we proceed with the queries, and here's the list. First up, Axis Bank. Like we flagged off earlier, flying in trade up a good 5%. The numbers were handed over last evening and the stock clearly reacting very, very positively to that. Bajaj Finance as well, one of the key gainers as far as the benchmark Nifty-Fifty index is concerned. Right now, it's trading with a gain of 2.2%. You have an HUL sulking in trade. Perhaps the market is not digesting the numbers very well. The volume decline is something perhaps that they are reacting negatively to. You have a Bajaj Finance as well. There's been a change of guard, and the numbers which were delivered last evening, yesterday during the market session actually for Bajaj Finance, that one not reacting very, very positively at this juncture. Let's talk about two stocks that are in focus on back of earnings to be delivered today. There's an L&T which is looking pretty weak in trade. It's down about 1% right now. You also have a Bajaj Auto. The entire auto pack actually is trading weak right now. Bajaj Auto clearly one of the top drags, down 1% as we speak. India Mart from the broader markets really looking upbeat right now. Strong set of numbers delivered. You also have Praj Industries as well, which is in the limelight. There's a carborundum as well. You had some fund action taking place here. And lastly, another earnings candidate, which is HDFC Life. So these are the stocks that we are tracking at the top of this hour. Let's kickstart viewer queries as well. First up, we have a query on M&M Financial. Mr. Nageshwar Rao has tweeted to us. He wants to ask our experts to suggest a positional call on M&M Financial Services, view on the rights issue and the impact on the stock going forward. Kunal, it's quite a topical query, I'd say. What is your view on M&M Financial? Should one look to invest right now?
So I think adjusted for right, the stock looks fairly attractive. It's been in the thick of momentum as well. We've seen the stock scaling up beautifully well in the last, I think, 1.5 or 2 months. In fact, the last 2 months have been particularly very, very fruitful for M&M Financial. So in that regard, it's a stock which is in momentum. It's a stock which has shown signs of good recovery, and of course chased by a lot of better volumes as well. So it's a stock which is in an uptrend. So when you buy a stock in an uptrend, you enter. There is the perfect level at or perfect price at which you buy, because the stock, whenever it's in an uptrend, it is always available at a costlier level. So I think in that regards, you can start buying now at current levels, and maybe if the stock provides any kind of dip, comes back to say 120, 130 kind of level, look to average it further.
Okay, Gaurang, what's your view on M&M Financials?
So Karanya, first of all, we do have a buy coverage on M&M Financials, and the company delivered its number, I think, just a week or 10 days back. Stellar set of numbers, and companies like M&M Financials, they are a lead indicator of the recovery in rural area as far as, and especially in the agrarian economy. And both these are actually leading the recovery pan-India. And if I have to reflect upon the numbers, well, they were much better than what the estimates were. And it is one of the stronger NBFCs which focus in rural and agrarian economy. On the rights front, if I'm not mistaken, and I stand to be corrected if I'm wrong, Karanya, I think it is at 50 rupees, which is a 60 to 70% discount than what the stock is trading at. And this is primarily a goodwill gesture by the company for their existence of almost 20-25 years of business. And I'm quite sure that investors are going to subscribe to this rights issue and welcome this valuation with both their hands. So my humble request is that if you bought it, please hold on. If you not, don't put all your money at one time. Staggered investment would be a proper approach for a name like M&M Financial, which has rallied since the numbers were announced and on fallback of this announcement of rights issue in terms of valuation.
Okay, thanks for that, Gaurang. The next query is regarding Godrej Consumer Products, and Nimish Patil on Twitter, basically he wanted to know GCPL, and he's examining its downward trend. So I guess he wants to understand how much more downside there might be in the stock. It's not really clear in the query, but Kunal, how's that chart looking to you?
It looks a bit sluggish on the short-term charts. The last 1 month, I think the entire month of July and maybe a week or two before that, the stock had remained more sideways. So 690, 720 is the range for Godrej Consumers, and it's been grinding in that range. Just that yesterday the stock had closed at the lower end of the trading range again, and given that slight breakdown. So I think keep it at a level. So I think if the stock manages to break back below that 677, 680 mark, which is today's low as well as yesterday's low, more or less, I think that should be a level where you should keep a trigger. If you're looking to short, if you're looking to sell, I think that's a strong support now. So it's better to short a stock or sell a stock. And if you're expecting a downtrend, that if it confirms break of its major support levels, in this case for Godrej Consumers, it's a sell below that 677, 680 mark.
Okay, and Gaurang, do you like Godrej Consumer from a fundamental or business standpoint?
Well, both actually, Varun. So, FMCG sector is something that has been driven by semi-urban, rural, agrarian economy. And if you have to just reflect upon what the management of Britannia had to say, even HUL, then, the lead indicator of the recovery is semi-urban, rural, agrarian economy. This company is primarily, of course, it is got great product profile, but via the acquisition that they did in the overseas market, they have got some fantastic product lineup to offer off the shelf for the consumers. The only problem is that there has been a slight bit of underperformance on the earnings front, but we are quite sure that it is only momentary kind of a shortfall. With the recovery in business environment and consumption picking up, I think names like Godrej Consumer will also start performing. And not to forget, they have got diversified products to offer across different categories. Our target stands at about 865 from a long-term point of view on Godrej Consumers. And as Kunal mentioned, I think if you're going to go short on the counter, be prepared to put your stop losses in place, because what even we are witnessing today, we are seeing corrections in the market, but all those corrections are bought into. So one needs to be extremely careful if going short on an FMCG sector is concerned.
Okay, got it. On that note, a big thank you to you both as always for joining in. We're done with the queries, and we're now going to move forward with Axis Bank. You all know about the result, and via the headlines we've communicated what the numbers were, but let's get a feel for what the brokerages have to say post these numbers coming out. And let's begin with the CLSA, who maintains their buy stance with a target of 600 rupees per share. So they're quite bullish from here on out, looking at definitely like a 30% upside from where the current price is. Axis Bank Q1 was better than expected according to them. The moratorium 2 book is 9.7% of total loans, and the operating profits have been better than expected, driven by cost flexibility. So factor in the capital raise, and then your 13.8% ROE by FY23 is realistic. So that's what CLSA says. Coming down to Macquarie, they have a slightly different kind of view. They maintain and outperform with a target of 487 per share. Now, the moratorium book for them was a positive surprise as well, coming at 9.7, and the PAT also was a beat on lower than expected cost and provisions. So they see that the valuations are pretty cheap right now, but that being said, the target price, needless to say, is lower. Yesterday, post these numbers coming out, Amitabh Chaudhary addressed the press. Let's cut into that and get you a few excerpts from that conversation.
During the last 4 months, the bank has significantly enhanced its collection capabilities, including work from home from collection staff, increased dialing capacity and feet on street to increase collection focus. The bank has been in constant touch with customers, obviously to explain the nuances of taking a moratorium. Despite these positive developments during the quarter, we remain cautious since the country continues to deal with partial lockdown. Customers will continue to have an option to request for moratorium too, while we continue to be judicious in granting moratorium based on COVID impact on customers. Again, I would say that overall the quarter has been decent with steady core operating profits, healthy deposit growth, driving loan growth. We have continued to build on our conservative stance and continue to create value in our subsidiaries. There are going to be few challenges for the sector related to surplus liquidity, muted loan growth due to economic contraction and general risk aversion asset quality. In such an environment, large banks with healthy operational performance, strong balance sheet and capital position, superior operational capabilities and digital powers are better placed to withstand the challenges. We as a bank have quickly adopted to the new normal and have transformed the way we work, bringing in greater efficiencies. We are confident of emerging from the crisis stronger and remain committed to achieve our medium-term aspirations.
Taking a break here, be back with more on the outside. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now on ET Now. Let's talk about some more individual stock movers. You have HUL that's sulking in trade right now. The stock isn't doing that well, of course, but brokerages do remain bullish on the long-term story. JP Morgan has maintained an overweight on HUL with the target of 1,240. Okay, that I don't think is correct, but let me just quickly read it out. Maintaining overweight, JP Morgan says the target is 2,400. I stand corrected. Resilient Q1 supported by share gains. They believe the company is well positioned for a strong recovery from the second half onward. The management has maintained cautious near-term growth outlook as well, something that they would also be watching out for, how it evolves going forward. You have CLSA downgrading the stock to outperform, target at 2,600 per share. Results they believe were in line with expectations. Addition of nutrition business has helped with their growth. They're also saying that defied headwind with execution, business recovery in the coming quarters is critical for valuation of the company. Let's also listen in to the management, what they said after the results came out. FMCG giant has also approved special dividend of 9.5 rupees actually. Neha Tyagi also posed some questions to the management. Let's cut in to that chunk.
I believe that one of the things that will happen even after the vaccine has developed, that as a country, our consciousness on hygiene and personal safety will go up significantly. Of course, I don't believe that the demand for sanitizers will remain at this level, but the behavior change that we are seeking in consumers, which in turn will help them lead a better life, will certainly get established.
Bajaj Auto is going to be putting out its numbers today. Karanya, since you tracked the company closely, what are you eyeing out for this result?
Well, it was an unprecedented quarter, really, if you look at how things have shaped up for many sectors, and Motown being one of the worst casualties as well. Production was completely on a standstill. Sales, showrooms, etc. were also completely closed for a significant part of the first quarter. We're witnessing a 64% decline in Bajaj's volumes, and that will, of course, translate into a weak set of numbers as well. The revenue figure we are expecting is 3,030 crores, down almost 61%. We're expecting PAT degrowth as well, close to 52-53 odd percent, coming in at 535 crores. What really also could slip quite sharply is the margins performance. We're expecting a 450-440 bips sort of a degrowth as far as the margins go. 11% is what our poll is indicating to. Of course, it's the weaker product makes negative operating leverage, which will play the devil as far as the operating performance of the company goes. Some headwinds also include the likes of the fact that there was a lack of profit on the BS6 price hikes. They've not been able to sort of garner any benefit from that. There were, of course, low volumes, which we all know of. But what we expect is better exports contribution and favorable currency exchange rate, which could offset the impact on margins to some extent. Of course, had this not been the case, margins could have come in way below than 11% as well. Of course, you also have low contribution coming in from three-wheelers, which may lower the overall benefit of the of INR rate as well as of exports contribution. Now, what I will be watching out for and what the street will closely be watching out for is the way forward. How are three-wheelers, the demand for it shaping up? How is two-wheeler demand looking like in local market, in global markets, key export markets for Bajaj? What is the production upgrade like? Has there been an impact of downgrading as well, which they will be witnessing this quarter? And the outlook on demand in key export markets is something that everybody will be closely watching out for. Bajaj, ahead of its numbers, continues to trade weak. Varun.
Okay, thanks for that, Karanya. So much happening at Bajaj Auto, so many factors to look out for, like Karanya just pointed out, and it's definitely going to be a key indicator for the markets as far as auto is concerned. So thanks again for that, Karanya. Let's now bring on board Avan, because L&T is also going to be putting out its Q1 numbers, and it's really important to understand what the street is expecting there. So over to you, Avan.
Well, we'll be watching out for engineering conglomerate L&T's quarterly numbers, and the Q1 is expected to be quite muted, and it is going to be a painful quarter, largely on account of the lockdown impact. There have been concerns on the supply side, plus the migrant labor issues, a deferment in ordering activity. So all of this is likely to play out in the quarter. We're expecting the top line growth lower by nearly 29% to 21,088 crore rupees. The EBITDA as well is seen lower by nearly 41% to 1,946 crores, and margins at 9.2% versus 11.1%. A substantial decline in the core revenues ex services, this is, with domestic projects largely seen to be impacted far worse than the international projects. Margins are seen relatively a little more stable, largely due to the higher contribution in the services business. The profit growth, though, is seen at 1,957 crore rupees, and that's largely on account of support from the IT and the financial services sector. Orders as well are expected to decline quite substantially in the first quarter, and working capital to sales is likely to increase from FY20 end levels, but should remain largely stable at an absolute level. Now, do remember the street very keenly watches out for L&T's guidance, and this time around in the previous quarter, the company refrained from even declaring a guidance due to uncertainty on account of the pandemic, which they felt it didn't make sense because there was very little clarity on the road ahead. So the street will keenly be watching out for now commentary on in terms of guidance. Will they be delivering one? Will they be slashing their guidance due to the uncertain environment, or holding on to their growth? Other than that, a ramp up in execution, the return of migrant laborers to the project sites, commentary on working capital management, all of this will be keenly watched out for by the street.
Let's get you some meaty now insights as well. There's been a disconnect between the Nifty and Nifty Bank, with the banking stocks underperforming. the market, can it be a case of outperformance or catching up going forward? Jayesh is here with all the insights.
Clearly, the Nifty Bank has been the rank underperformer that we've had all throughout this year. Let me give you three particular broad parameters that I'm going to work with. One is the market performance that I'm going to map between the Nifty and the Nifty Bank as well. If you have a look at the drawdown that we saw earlier part of 2020, the Nifty corrected as much as 40%, while the Nifty Bank corrected more than that, as much as 50%. However, there has been significant recovery in the markets, and the retracement level for the Nifty, it has recovered more than 61.8%, while the Nifty Bank has managed to recover just about 38.2% from its low point that we hit in March. The recovery from the March 2020 low for the Nifty has been as much as 49%, and for the Nifty Bank, that has been about 41%. So once again, it fell more and it has recovered less than the Nifty itself. The next plate that I'm going to refer to is the key moving averages the market participants look for. Now, the three key moving averages, which is the 50, 100 and 200-day moving average, the Nifty has managed to claw back once again above all of these three key levels. However, interesting to note for the Nifty Bank that while it is above the 50-day and the 100-day moving average, it is yet to trade above the 200-day moving average, which stands in excess of 26,000 points on the Nifty Bank itself. Now, interestingly, the last plate that I want to refer to is the gap analysis that I have done. While the market was falling in 2020, there were 5 gaps that were created on the downside. For the Nifty, 3 of them are still open and a couple of them have been closed. So let me run you through one by one. 12,071 was the first gap, which is still pending. 11,537 is still open. 11,245, which is where exactly we have been pointing towards today as well, that is still open. 10,827 and 10,334, those 2 gaps have been closed. While the Nifty Bank, the same thing, if you map it on the chart, all the 5 gaps are still open, right from 30,700 to 29,914, 28,536 as well as 27,162, and the last one at 26,234, which is where exactly the 200-day moving average is also placed. So there could be a catch-up trade or an outperformance by the Nifty Bank going forward. Clearly, the ingredients are there. We'll have to wait and watch if that happens.
Okay, thanks for that, Jayesh. Time to slip into a quick break here on Buy Now, Sell Now. Plenty lined up when we come back.